Good morning, guys. It's a quick trade recap here. Yeah, so I'm gonna go over the setup that I took last night, so I can show you guys the idea behind the trade that I took. All right. So starting the week, I was already bearish because we had this inversion gap right here. Well, it's an inversion fair value gap slash what do you call it? Inversion slash suspension block because we have a volume imbalance with it. So when price came up and tag into that, this candle right here really, but I did say that if market goes up and failed to continue higher, we're gonna dump because of the fact that we inverted this gap, and if we're gonna go higher, this candle would have been utilized to take price higher, or this one, but it inverted. So I knew when that happened, I wanted to go short. So I was already like hunting for shorts. So the moment the next candle opened up, I traded that day, and I also traded this day. I was profitable for this day, and then I was break even for that day. And for today, I'm gonna talk about today. So for today, the trade that I took, it was basically here. I had the what do you call it? This tool in here that helps me just mark out the fair value gaps that I was hunting for. So after this huge move drop, this entire move happened. Price retraced back up in here into this inversion. The yellow shaded is an inversion fair value gap that was on the hourly right here. And I said, okay, if we hit this, then I'm gonna wait for another fair value gap to form as confirmation that we're gonna go lower. And my target was originally this midpoint and this daily sell side. So when price break down here on the hourly and left this fair value gap here, I said, okay, if we come back up and tap into there, I'm gonna go short. So when price came back up, I went short. As soon as this candle right here, as soon as it went in there, I went in there with 7 micros, and I had my stop right above this candle right here. Although price did it came really close to my stop, but it didn't take me out because it was still inside of the inversion. So we got real close though, but then price kept on meandering around for hours really. This trade took, let's see, 1 2 3 4 5 6 7 8 hours to pan out. Actually, it's an 8-hour trade because I took the trade off the 1 hour of CB. So when price hit this, I just had to just leave the position running, leave my stop in place, and just wait for the market to pan out. And then in the morning, or like 7, it just flushed. You can clearly see, like, yo, it just flushed straight down to target. And as soon as we're approaching here, the daily, it was kind of like playing around a little bit. It was like right here, playing around it, and I just cut the trade. I took off 5, and I left 2 running, and then I took 1 more off. And then as it came down, I left the runner. I was gonna let it run for this little down here, but since price started going back up, this candle was like going back up. I was like, okay, I'm just cut the trade. I just cut the full trade off, and that was that. But my idea was still the same, that price was gonna go down here. But if I had let the runner run, I'd have to endure all this pullback and then another redelivery. But I was like, I don't want to stay for all that because we got very close down there anyway. So I was like, there's no need to really like do that because you don't want to give back the profit that you made. And as you can see here, that's the P&L for the day. Funded account P&L for the day. But yeah, and that's pretty much it for that. And down here, this was a volume imbalance. I'm going to show you this right here, this daily volume imbalance. That was the main draw on liquidity because I knew we was going to take out the low and then go for that next, and then possibly this old weekly bullish fair value gap, which is this one right here. So I think we're going to invert this probably next week or today maybe. Once this gets inverted, we're going to probably see like an even bigger drop to maybe these levels down here, because I'm also watching this right here that we have a fair value gap down here. Oh Lord, we have this nice fair value gap down here that I think we could probably visit, but I don't know how long that will take. So that could be like the main draw. Price might see a huge market crash, but then again, I don't know what's gonna happen next. I just gotta like go off what the levels are telling me. So far, but if we invert this, more than likely price is gonna come down here like, in the next few weeks and months coming up. And at the same time, let me turn off the executions real quick because I gotta make sure I show the executions. Let me turn it off real quick right now so I can show you guys something. On the daily chart, you can see there's a possible fair value gap forming right here. It's a bearish fair value gap. It's a CB. That's a breakaway gap because we did close below this low. We closed below this candle as well. So price definitely not gonna come back up here, which means tomorrow, more than likely tomorrow, price is probably gonna just fall down again, maybe creating a fair value gap passively for next week. Because I'm pretty sure we're gonna create another drop maybe tomorrow, and then we might not even get thank God it's Friday because like the monthly is very bearish. Like the monthly, like it's heavy. It wants that low really bad. So it's very, very heavy. So there's a good chance we might see like what do you call it? Good chance we might see this get filled today, or even we hit this low today, which will be like another 400-point drop. So right now we're already down 400 points. I wouldn't be surprised if we drop another 400 points because it's NQ. This can happen in the same. I've seen 1,000-point drop already. So as of right now, yeah, it's only a 1058. We have a lot of downside to cover. So, but yeah, I only take my entries off like the hourly or sometime the 15. If there's something on the 15-minute, yeah, I'll probably do it too. Like this would have been the first entry point, but I was like, I want an hourly gap instead. I don't want to enter on the 15 because just because the fact that it was before midnight, I didn't want to enter too early because I'd have to hold through all this and wait for like price to like gravitate lower. So I'll just wait. So instead, it was better for me to just wait for the hourly gap to form. And like the main thing about this is like you don't have to rush it. Just switch to a higher time frame and just wait. Because it's the same levels that the people who trade on the lower time frame they're gonna key off of anyways. Like you see, got a 15-minute gap here. Price opened up at 9:30, runs up where inside that 15-minute gap, hits the midpoint, flush. That could have been your trade too. It literally runs up, and if there's two fair value gaps, go for the first one that was formed. Limit order in the mid at the midpoint, stop above the high, and then boom, flush. Just wait for the market to just yield. Another one here. It's after 10 a.m. See this right here? And if you take out the standard deviation tool, you put at the low of this candle right here, which is this one, the 2.5, near the 2.5. So max pull is probably going to be down here. It might not happen today. We might, like, because, you know, the way we move quite a lot. So there's a good chance we might see it, we might not see it happen today, but we'll see. Because this is a very bullish area right here. Very, very strong bullish area. So it will take a lot for the price to kind of like gravitate down here because this act as a bullish fair value gap. That's the thing when it comes to volume imbalances. It acts just like a bullish fair value gap. So it's all about how heavy the market is. Does it really want to like get out of this range as fast as possible? But right now it's taking its time. It's been there for like 2 hours now. But quite frankly, I was already done trading, so like I don't need to really worry about like any of this because my trade was basically from here to down here, then I was done for the day. I don't have to. I didn't worry about 9:30. Like I did the pre-market candle because if there's gonna be a move, you can always catch the 6 a.m. candle early, like from 7 o'clock ish. You can kind of catch it pretty early. If you wake up, you gotta wake up early just to catch this candle before the next one form. Because if you look, you see 6 a.m. If you can catch the 6 a.m. candle early, you're already set for the next one. Especially if it's like if it's a continuation day, you see 6 a.m. So, but yeah, that would be all for today. Thank you for watching.